So welcome everybody at Banking 4.0, an event for the first time dedicated to cryptocurrencies, or as is more fashionable to call them these days, digital assets. It's kind of exciting for me to be here. I first had a discussion with Sergio last fall about the idea of an event like this. It was just an idea, he started with it, and here we are today and tomorrow with a very impressive rosters of speakers from all over the world. They include not just blockchain companies, various innovators and service providers in the cryptocurrencies ecosystem, but also very relevantly central bankers. And for that reason, I feel the need to go back a bit in the history just to give some context. It's not like always central bankers were paying attention to cryptocurrencies. On the contrary, at the very beginning of the phenomenon, this was totally ignored, I would say, by the regulators. Dismissed is probably the right word. As being irrelevant, highly speculative, Ponzi scheme, tulip mania, and the list can go on and on in terms of the various taglines that were used in relation to this new economy, I would call it. Yeah. Things have changed, and if any of you would just take the time to Google a few words like cryptocurrencies G7, cryptocurrencies central banks, cryptocurrencies OECD, cryptocurrencies World Bank, cryptocurrencies or blockchain, World Economic Forum in Davos. And last but not least, because to be honest, this is what convinced me that this is a phenomenon that deserves very, very deep attention, just check cryptocurrencies or blockchain and Basel, Bank of International Settlements in Basel. I mean, that is the central bank of central banks. And you'll be amazed about the number of studies and materials and reports and presentations that you'll find on BIS website about this. And yes, they focus a lot lately on CBDCs, but not only. And to be honest, I'm thinking actually to open the day one of our event with a quote that I picked from Bank of International Settlements website. And it says, as history has demonstrated, the evolution of money and payments delivers new opportunities and business models alongside new challenges. Our economies are becoming increasingly digital, user needs are rapidly evolving, and innovation is reshaping financial services. Many of our jurisdictions are seeing falling transactional use of cash, and new forms of digital money issued by the non-bank private sector, such as stablecoins, are emerging. Today, central banks are exploring how they can continue to deliver their public policy objectives, ensuring they're able to respond to future systems that appears to be changing rapidly. Okay, so summing it up, once, from my perspective at least, but I think bankers in the audience would resonate with that, once Bank of International Settlements takes this phenomenon seriously, and it's obvious they're taking it very seriously, nobody can ignore it, okay? With that being said, I would say let's start with the first keynote speaker of today, whereas the first half of the day is actually going to be focused on CBDCs, central bank digital currencies, but also on payments in general, okay? I will pass the floor to Antony Welfare, who is a CBDC lead for Europe with Ripple. And I'm not going to, because I'm going to moderate a panel later on DeFi, I'm not going to ask Antony any question. I'll just pass the floor to him, and we'll catch up a bit later.
Perfect, thank you. Okay, so good morning, everybody. Everybody feeling good and awake? Okay, there we go. Okay, so good morning, everyone. I'm going to talk about CBDC opportunities and real-life learnings. And really, this is all about getting you to understand this is really happening, and there's lots of different things happening in the CBDC stablecoin world. No. Okay, there we go. Perfect. No. I can see there. Perfect, thank you. Okay, so quick introduction. So I've been in the blockchain, sort of enterprise blockchain area for around 5 years. And this, I'm told, makes me a veteran in sort of blockchain world. But I always say you can't be an expert unless you've done 10 years. So I've still got 5 more years to become an expert. I've worked on over 50 projects, from supply chain to payments to healthcare, etc., with blockchain. So I got into it back in 2016, 2015. Really excited about it. It's going to change the world, and so that's why I basically changed my career. Now with Ripple, looking after the CBDCs for Europe and global partnerships. If anybody doesn't know Ripple, and I'm sure most people do, we're growing massively. So by the way, if anybody knows any engineers that want to work for us, let us know. We've probably got about 80 positions at the moment available. We're growing about 50 people a month. It's phenomenal. Bearing in mind the crypto market's doing that, our hiring is doing that. And that's because we have a couple of parts to our business around finance. So really just to talk about where our philosophy is and where our vision comes from. So Chris Larson, our co-founder and executive chairman, talks about enabling the Internet of Value and working together. And it's something that I've always said with blockchain. It's all about working together, be it companies, be it governments, developers, institutions, and people. So it's really important that we work together as one, and you'll see that in a second when I talk about the learnings. Ripple is 2 parts to the company, really. The global enterprise payment infrastructure called RippleNet, cross-border payments, so lots of different areas there, and that's a massive growth area for us, so payments between different currencies globally. And we've been doing that for around about 10 years, so we've got massive experience on enterprise scale. And all of this is based on the XRP ledger. So I'm sure everybody knows the XRP token. The XRP ledger is a pure decentralized platform. It's not owned by Ripple. We're one of the users of it. And that enables fast, cheap transactions for payments, especially financial payments. It's built for payments and making quick, easy payments. Okay, so when you think about XRP, that's what it's about. Whereas some of the other blockchains are built for other purposes. The same as the internet. There's lots of different players in the internet using it for different things. And just a few of our clients that we've got, so over 300 customers, including Santander and some of the the biggest payment companies in the world. Okay, so let's get back to the conference. So if you got a little bag, or if you've seen the logo, it's called Embrace Change. And we're talking about embracing change. And a little quiz to wake everybody up this morning. So most people with crypto are going to know exactly what this is, but they probably get it wrong. Okay, 3 charts here showing the change of these assets in the last 5 months. Okay, this is massive. The change of assets in 5 months by this amount. So an asset has declined 47%. Another asset has declined by 61%, and another asset has increased or decreased by 10%. Okay? One of those is ARC Innovation EFT. One of them is the crypto market, total crypto market. And one of them is the USD ROM. Okay? The USD ROM's a bit easy to see because it's the one in blue at the bottom. But it's important to think in 5 months, the USD RON has changed by 10%. A currency has moved by 10%. That's not the worst ones, obviously, if you think Turkish lira and some of the others. The one on the left, who thinks that's the crypto market? Who thinks it's the ETF? 50-50. The one on the left, 47% decline, is actually the crypto market. The one on the right is Cathy Wood and the NASDAQ, basically, tracker, okay? So when we talk about change, crypto, everybody says, crypto's bad, crypto's really bad. The facts are there. And by the way, the value of a currency moving by 10% dwarfs either of those 2 other stats. A 10% move in a cryptocurrency, in a fiat currency, is massive. And so we're in a world of change, and I think that's why this conference is important. What is a CBDC? Lots of people have different views. I have a very simple view, but we've got an official explanation of what it is. And I think the picture is the easiest. It's showing the central bank and the payment system. That's what this is about. It's about a sovereign nation issuing a currency and using that digitally in whatever way you need to use it. So obviously the lei, or the euro, etc., etc. But CBDCs are not on their own, and CBDCs are now together with, maybe-ish part of, stablecoins. Anybody know a stablecoin that's talked about a lot recently? UST, by any chance, or Luna coin? So we've been talking about stablecoins for a while because a stablecoin and a CBDC are actually quite similar. In terms of technology, they give or take the same. A CBDC is obviously issued by the bank, the central bank. But you've got different flavors of stablecoins. Now, we don't have regulated stablecoins yet, anywhere in the world, mainly. So we're expecting stablecoins to be regulated. MiCA and the Eurozone are coming up with lots of different rules and regulations. Hopefully, they'll be innovation-friendly and they'll work well. So we sort of see CBDC as the top one, regulated, then non-regulated, then some weird and wonderful ones, which there's different mixes, different flavors. But it's important to see that the innovation is happening, and this is moving quickly, because all of those have different values and different amounts at the moment, but some of them are into billions. Obviously USDC, USDT. So they could destabilize markets. Where does this all fit in together? And I've put the diagram up just to really confuse a bit. It's actually quite a nice picture if you think it's a nice flower, lots of colours. Brightens up the morning for everyone. What it's showing is basically CBDC. There's not just one type of CBDC or stablecoin or anything else. That's the reason why I put this up. And this moves as well, depending on the country, the jurisdiction, the exchange, and everything. So it's more or less in how we've got it here. This is how the monetary system fits, but it is, flexible. Also, the really important thing to show here is that long-term, cash may or may not go. Short-term, cash will still stay, especially in some certain countries where cash is high. There's no way cash is going to disappear that quickly. Cash equivalent and a replacement for cash is going to be interesting, because you can always give your notes to somebody and it's an acceptable payment. How do you do that if the internet goes down, if the power goes off? So we need to think about offline and how that works. It's one of the most important parts with any sort of digital currency. Importantly, why do we use DLT or blockchain for CBDC? We're not doing this because it's a buzzword. We're not doing this because we like blockchain. I like blockchain. We're doing this for a reason. DLT technology, there is a reason why this works. Here's a few of the sort of main points that you've probably seen before, but global interoperability and scalability. With a decentralized platform, you can scale and grow it however you need, however big, which is quite crazy. A normal finance system costs a lot of money and takes a lot of effort to grow, whereas actually you can just allow, the second point, anybody to join the network securely. So you can grow the network hourly, daily, whatever you need to do, securely. And that's massively important for a global financial system. Transactions are settling in real time. When you make your credit card payment today or your card payment, when does that settle? How long does that take to settle? 1 day? 2 days? 3 days? Depending on the currencies, it could be up to 3 days for it to actually really settle. If I pay you with XRP now, which is the base of our technology, it will settle in 1 or 2 seconds. And that's it. You've got the money, it's gone from my account. There's no reconciliations, there's no other people to go through. So it's fast and it's really quick. Importantly, for any currency, and especially a country currency, high resiliency and security. You have to have security and resiliency for your central bank currency. It is the most important payment mechanism in your country. And that's because there's no single point of failure, because there's lots of different versions of it. And each of these versions can be held offline, in different countries, in different areas, in different styles. So basically, you've got what you call disaster recovery built in to the network. And then finally, and I think this is one of the most important and one of the sort of enablers of innovation, is real-time transparency. If you can see what's happening in your payment network everywhere, you understand the value of your country, where money's going, where it's happening. Now, I'm not saying about privacy, okay? That's a different discussion, okay? So you can do this without knowing who is doing what. Okay, so that's very important. But actually, blockchain technology tells you the transactions that are happening where. So you could, in theory, look at the entire money supply of your country with the click of a button, which you can't do today. And then finally, think about the way we build our technology today. So we build our technology with the perfect path in mind, okay? This is something to get your head around. It took me a while to get my head around this one. Everything we design, from the cash machines to the coffee machines to the cars, is that everything will work perfectly all the time. Does everything work perfectly all the time? No. If myself and James, our VP, and Mary, we all flew in yesterday via different parts of the world, and we all had disasters on the way. So that was 100% disasters along the way getting into Bucharest. So, things don't happen perfectly, ever. So if the power goes, so think about the payment system. If the power goes off, or if there's a bad actor, what happens? I know in the UK over the last couple of years, quite a lot of the banks, their mobile banking and internet banking has been gone like a day without having your banking system. It's like, that shouldn't be allowed. I can't, it's something that's just doesn't work. If you build it on DLT, it's 100% uptime 100% of the time. So XRP Ledger has been running for 10 years nearly, and has never, ever, ever had any downtime. So you can always transact. So decentralized blockchain is built with an imperfect world in mind. It's built with the fact that we know things will go wrong. And that's probably one of the most important things to think about why DLT. Okay, so I'm going to talk about 4 real-life projects and then on to the learnings for CBDCs. Okay, so first one we have the Royal Monetary Authority of Bhutan, and then we'll talk about Palau, LB Coin from the Bank of Lithuania. We've got a stare from the bank here. And then I'll give you one slightly different one, which is something I worked on previously, but it's about financial inclusion and helping the physical to digital. So if we go to pure digital currency, how do humans interact with it? So in Bhutan, we're working with the Royal Monetary Authority there to pilot a full CBDC. So Bhutan's a small country next to India, a lot of money flowing through from India, and they're very the most important thing to them is sustainability and inclusion. Okay, so they're using our platform to test out a full CBDC. So we're working with 2 commercial banks and the central bank at the moment, and then that will eventually go down to the people and the adoption. So that's a really interesting use case that's happening at the moment. Palau, I always like the picture of Palau instead. James can tell you a lot more about Palau later if you want to know, because he goes there. We're not allowed to go to Palau, there's only James goes. So, and probably because of the picture. So Palau's really interesting, if I just step back a slide. Palau is in the Western Pacific, and it's a dollar-denominated country. So they use the US dollar, so it's pegged to the dollar. They don't have their own central bank. But what they want to do is have a USD, in essence, government-issued stablecoin. And this is a really interesting project because this is as important as, it's issued by the government, But it's pinned to the US dollar and it's fully digital. So this can give them a lot of benefits around cross-border interoperability in different areas where they can work on. And it will be the first US dollar stablecoin, in essence, backed by a country. We've also, which is not on this, we've actually got a US bank, which is a US deposit bank, who is also issuing a USD stablecoin. So these are moving rapidly. And it's important from a CBDC perspective to think, how do these work together? Because you can't really have lots of stablecoins and CBDC and cryptos and everything else, because it's just going to get too big. So I think that's where governments, well, we know where governments are starting to think CBDC, they need to move forward and move quickly with it. Oh, sorry, I've gone the wrong way. This is a really interesting one, the Bank of Lithuania LB coin. So this is the world's first central bank digital collectible coin. And the reason why I think this is important, because obviously Lithuania is part of the Eurozone. So Lithuania can't do a digital euro. They can't do that. But what they did, they tried this commemorative coin back in 2020, where you went on, you bought a number of tokens, and then you transferred that into a physical silver coin, which has a value of 1918, which is part of the history. And I think this was an amazing experiment for a small country in Europe to test out how the people interact with a digital currency issued by the bank. So obviously it's not really a central bank currency, because you can't go and do too many things. But I've argued many a time to say it is a central bank digital currency because it's issued by the central bank and it's a digital currency. And you can pay for things if you wanted to with the silver. So it's pedantics around it, but I think it's an important use case. I think the clicker's finished. Oh. Can we just move on a slide, please? Feels like we're in a crypto winter here. So, any of you cryptos? Who's feeling the pain at the moment of cryptos? Put your hand up. Good. Guess what? It gets better. We're fine. We go down a bit more and then we'll be all right. What I didn't say on this one is we're working with the bank for phase 2 of this to see what that looks like. So we're still in discussion of what that looks like, whether it's another digital coin, whether it's a mixed digital coin, where it's something to be used like a CBDC, like a digital type euro. There we go. Okay. Finally, one more, which I think is really interesting, and is something that we did with our partner DXC. This was a biometric account opening and debit card issuance in minutes, and it's actually really cool technology. So it isn't backed by blockchain, it's not a CBDC, it's a normal sort of fiat digital currency that they used. It was in South Africa. But you can use this to do the physical part of a CBDC or stablecoin. And basically, you go up to that machine with your fingerprint and your national ID number, and within 5 minutes, it pops out a debit card, and you can go and do what you want and spend anywhere. You don't need to have, your bank account, your bank statements, your mortgage statements, any of that. You can open an account straight away, and obviously, if it was based on a digital ledger, then you could just sort of do quickly. And I think that's very important for financial inclusion and how we can start to bring digital and physical together. So the most important bit, what have we learned? So we've been doing this for a while, and we've got some learnings to share. First of all, technology. Now, obviously, we're a technology company, so I'm going to start with tech. Utilize the benefits of DLT. So I spoke earlier of why you'd use DLT, and I think that's the most important bit. Use DLT because it's got these benefits that we went through. Maximize the different organizations using the ledger. So one of the things you can do with a ledger, which is easier to do than with existing finance systems, you could bring a telecoms company onto your network to interact with payments and P2P payments and things like that. You can easily do that securely. In the existing system, you would have to go through so much security and so much different technology that it may not be worth them doing it. You can also bring on small innovators and smaller companies into your CBDC network, which would be amazing. The real-time transactions and transparencies around reporting and analytics, being able to know where the money is, what's happening with it, being able to use it in different ways, I think that's so important. And then the most important for me, coming from, I've worked a lot with enterprise, and then obviously with a cryptocurrency as such, which Ripple is, there's so much happening in crypto and blockchain that is relevant to a CBDC. Massive amounts of learning. DeFi, for example. Who wants to earn 5% on their savings? Put your hand up. Nobody? James wants to. Who wants 10%? Yeah? So let's not say 20% because you're going to lose all your money and that's lunar, but anyway, we won't do that one. But in reality, you can, at the moment, earn something like between 3 and 12%, I think it is, on some of the platforms with DeFi. I don't fully believe that's going to happen forever, but those models will change and you'll still do better interest than holding it in your fiat bank account. So it's something to think about as this progresses. And once these become regulated, and therefore, if they disappear, then your money's safe, then it's going to be a whole new world. That will bring the returns down. But things like that, how to do DeFi, how to do P2P, a bank can learn that straight away from the crypto world and implement it in a more regulated, more consumer-friendly way. Second part is use cases. Why are you building the CBDC? What's the point? So the first question we always ask our clients is, why? What are you trying to do with the CBDC? What are you trying to fix? Some of these are not obvious examples, and I've got two really interesting ones here. Palau, peer-to-peer lending. So in Palau, what happens at the end of the month, the main sort of breadwinner of the family goes to the bank and withdraws all the cash from their salary and then gives it out to friends and family, okay, physically. One thing with that, one, it takes time, and two, how do you know who you lent the money to and whether you're going to get it back? Yeah, so who's lent money to their friends and never got it back? Yeah, see? James, still waiting for that money? Yeah. But imagine if you did that with a digital currency. You could basically set it up. So I lend you 10 euros and you pay me back €1 a month or €1 a day automatically. Nobody has to, so you don't need any family arguments. You don't need any, arguments with people. And then the other one, which is really very different, and something we learned from Bhutan, is cash blessings. So when they go to sort of the, their religious ceremonies, they have to take a perfect note, like absolutely perfect. They actually go to a kiosk on the way in and change a dirty used note into a perfect one. And this has to still happen with a digital currency. We don't know the answer, by the way, so if anybody's got an answer for this, it'd be good to know. But we need to replicate this for Bhutan. It's really important to the country and to their values. And so that's something that we need to think about. So the use cases are not just the obvious use cases around financial inclusion, cross-border payments, remittances, etc. And the question I always say to ask is, how will the citizens and businesses adopt the CBDC and why? So you've got to then think about the businesses and citizens and how and why they'll use it. The third area, should I say, innovation and learning culture. And James is going to talk a bit about this in a couple of hours. For me, it's innovate, don't iterate. Take the big step, okay? What normally happens is we add something, we make something a little bit better. Okay? The car wasn't invented by making something else better. They just came up with the car as a new idea. Like, crypto in the first place, peer-to-peer lending and Bitcoin just appeared magically in 2007. There's new technologies are there, the opportunities are there. So actually think bigger and think differently. We view the CBDC world as a platform for innovation, and James is going to talk through that in a second. The other thing, get started. Like, go and do something. Instead of talking about it, do it. One of the things I love about Lithuania is they went out and did it. And actually, the best part of that, they then sent those physical coins to all of the ECB bank members, and it was talked about at a high level. That then opened the door for Lithuania to work with the ECB and do some amazing tests with CBDCs. So get started, because seriously, it will happen, and you'll have some cool things. And the final thing, be open to the unknown. You know, I've been in this industry for so long, feels like. Every day there's something different, something new. You know, be it, you know, the UST Luna, which has just been a disaster, which the Fed picked up straight away, and the US government. It was quite quick that they understood that. But the unknown is going to happen, because guess what? This technology is new, and we've never had it before. Teamwork. Teamwork. Blockchain is a team sport. And if you read a copy of my book, which I forgot to mention at the start, but I always say that blockchain is a team sport. It is really important. It's about working together. Involve the other parties from the start of the journey. So don't try and fix this as a commercial bank, as a central bank, as a payment provider. Try and fix it together. Not too many parties, because otherwise nothing gets done, but start working together in smaller areas, because the expertise is there, it just needs bringing together. Regulation needs to catch up. Okay? Historically, regulation is always behind, and I think it always will be behind, but it needs to move a bit quicker. I mean, if I've been doing this for 5 years, and I've not been it that long, why can't the regulators have moved forward by now? You know, so, and I get the complexity of regulation, but we still need to move. And then finally, look to leverage the deep skills in public-private partnerships. You know, without question, there's some crypto blockchain companies here that are going to talk later on today and tomorrow. They actually have understandings that the bank and the commercial banks would actually need and understand, and so working together. And then finally, and the most important bit, is education. Nobody really understands the potential of blockchain yet, and if they do, they're lying, because this is changing daily, and new ideas are coming up daily. Education needs to underpin the whole process. So one of the things that we do with all our clients is we have an education stream. So we educate as many people in that organization or that network as possible, and continually. You know, we're in a great position. I work for a crypto blockchain company. We learn about it all the time. So I get to learn every day what's going on. And yes, we still only know that much. There's still so much to learn. So invest in education from the start and educate all the parties. So educate the small businesses, the citizens, the banks, the payment providers, the hotels. Everyone needs education to understand it. Because if you don't, they'll make up their own stories, and then they'll think it's bad. A lot of the sort of discussion around CBDC in, you know, the general press and social media is that it's taken away your privacy. Doesn't need to. The technology can do it with complete privacy. Doesn't need to take away anybody's privacy. You need a balance, you need to understand why. So finally, make it real for the citizens and businesses. How can, you know, the question is, as a person, how can I use a CBDC? How will it improve my life? If you as a central bank, as a commercial bank, can answer those questions, you're going to get the adoption and you're going to be able to fix their problems. Okay, thank you very much. So any questions?
I think people are just warming up, so thank you, Antony, for the presentation. Before passing the floor to Mirela Ciovanu from the PayPoint, I'll just I have to say one thing. Is probably a bit ironic that we start a conference around cryptocurrencies with CBDCs. And when I say ironic, I mean from the perspective of what you could call the bleeding heart libertarians of the crypto world, right? Because that position is saying, look, CBDCs are the opposite of what you can do with DLT versus cryptocurrencies. That is to say, CBDCs are centralized, not decentralized, and they are permission, not permissionless. So, but on the other hand, a meme or an irony or a sarcasm that has been tagged on the crypto industry for many years was that, you know, blockchain is a solution in search of a problem. Right? Well, funny enough, it seems to be a solution for a central point of our lives, of our economies, which is money. Because otherwise, why would all the central banks be looking into using blockchain as a solution for money? So definitely, you know, I mean, I think it's only apparently paradoxical. Yeah. In reality, use cases are there.